Hi, I'm Jim Gosnell with Jim Gosnell Futures Trading Systems, and I'm here today with one of my students, Randy, who has just gone from paper trading to real trading. And so we're going to get an update from him today on how he's doing. Welcome, Randy.
Thanks.
And do you have any questions that have arisen since you started paper trading?
I have a few. I wrote them down as I was in this real money trading. When I was paper trading, I was very successful. Was doing it for about 2 months, and 85% of the time I made a profit. So I thought, I am ready. I am ready to go do this thing. And so I opened my account and started trading. My first trade, I'm nervous, I'm sweating, I'm going to push the buy button, I'm going to enter a contract. And I did. The indicator showed me what to do. I entered the contract. I got out of the contract. It was $250 up. I'm going, this is good. And that's all I did that day. I made my one trade, and I was a positive trade.
Right.
Then over the next few days, things went south, and today I'm $200 down, which is fine. I'm not 2,700 down, so I'm good.
Right,
200 is nothing.
Right.
And I realized what happened with my mind in not the system and not everything I did, but my mindset with real money. I panicked and I got out before I should have. That was the biggest thing that happened. And I watched the sale, the contract continue into a profitable had I stayed in.
Right.
So my first thing was just fear of, oh my gosh, I'm going to lose the farm here, and I got out.
Right.
So that's the first thing. And I came up with this saying that you should paper trade as if it were real money. Don't do anything different. Don't take any more risks that you would. Just do it exactly like it's real money.
Right.
And then when it turns to real money, don't think about the money.
Right.
Think about arrows and indicators and lines, and that's all it is. And stay with you have to trust the system.
Right.
And so my first question is my stop loss. My stop loss was too high, and through paper trading, I figured out where it should be. But I moved it up when it turned into real money. And it went against me.
Right.
So is there a good stop loss number in points below or above the where you entered, or is it?
Well, it's kind of subjective. For me, I like to use profit targets of for each contract that I'm trading, $500
Okay.
profit target for each particular instrument that I'm trading, and so. I usually set my stop loss to match the profit target. So if I'm shooting for a $500 profit, then I'll set my stop loss at $500. So I have an equal distance between each one. So, a lot of times the indicators that I use will get me out before my stop loss is hit if there is a loss. So that's usually how I like to do it.
Yeah, okay.
And but it is subjective, depending on what kind of profit you're looking to get out of each trade versus what your stop loss is.
So you kind of match the target with the stop.
Yeah.
And then I tried doing the trailing stops, and so I did pretty much what you said. Mine's 400, so I had a 400 target, a 400 stop loss. But at some point in time, it would start trailing. And so now I have a distance behind.
Right.
And is there a good distance behind, $100? Once you've established a profit.
Yeah. Normally what I like to do is, if I have a $400 or $500 profit target, I'll take 40% of that, which is 200.
Okay.
And so if the profit I'm in a trade gets to 200, then I move my stop to break even from 500 to break even, and even maybe a couple of points above that to cover commissions. So that way, if the trade comes back against me, I'm not going to lose on that trade. I'm just going to go out at break even.
Okay.
So, and that figures whatever profit target you're looking at, then multiply that by approximately 40%, which is a Fibonacci number, that 40% is close to it. And a lot of times when it reaches that, it'll retrace, come back to you. So if it doesn't, you just stay in until it hits
Right.
your profit target. And if it does come back, well, at least you haven't lost anything on that trade.
Right.
So,
Right.
but that's what I like to do. Again, people are free to adjust that however they feel comfortable with. But I found that works best over time.
Right.
To do those kind of numbers.
And then another, you mentioned commissions. That's something in paper trading you really don't track because you're not paying them.
Right.
So in the real trading,
right.
I had one day I think 26 contracts that I'd done. Now I was profitable a little bit, but after you take the commissions out, I'm going, I can't do 26 contracts a day.
Right, yeah.
So what do you normally do? 2, 4, 6? I mean, is there a...
Well, when I'm trading regularly, I usually trade 3 contracts, and so the commissions on that vary depending on which broker you use.
Right.
And so that is a factor over time you'd want to look at. I know with the Infinity futures that I recommend you trade through. I use Thinkorswim charts, but I like to use Infinity to actually execute the trade, and their commissions are right now at $5 round turn, which means if you buy a contract and sell one, it'll cost you $5 per contract. And so you just factor that in to see what you'd be paying for each trade that you get into.
Right.
And so that's one of the costs of doing business. But if you're profitable over time, that's a small part of
Right.
of what your expenses are going to be.
Mm-hmm.
So
Yeah. And then the time of day that you trade. I usually get up in the morning, I watch what's happened prior to the market, and then when it opens, I'll either enter or not, depending on what it is. But do you think is morning or noon or the end of the market a better time? Or
Well, I tell people the best time to trade usually is 9:30 to 11:30 Eastern time.
so from the open to a couple hours.
Couple hours. The reason for that is the European markets are open then.
Oh.
Our regular stock market opens at 9:30 Eastern. And so a lot of the big banks are trading futures during that time. So there's a lot more volume between 9:30 and 11:30.
Right.
Once 11:30 Eastern hits, and the European markets are closing.
Right.
And then shortly after that, the Wall Street gang takes lunch breaks from 12 to 1, and then at 1, the Chicago traders are at lunch from 1 to 2 Eastern.
All right.
And so usually from during that time period, it's not a good time to trade. Then after 2 Eastern, then you can start looking again to get some good moves. But during that time when the European markets are closed from 11:30, and then the lunch crowd
Right.
hits, and 11:30 to 2 is usually not a very good time to be trading.
Right. So in the morning, you've got the European and the U.S. market open. So
There's a lot of volume.
And speaking of, I want to go to the Thinkorswim chart here and talk about just that, the parts of the time when the market here are closed, but the shaded areas are times when our market is closed.
Right.
And we see these huge swings in trading. Is that a good time to do? Here's a great down, and there's a great up to do trading. This is
Right.
I don't know that we've got the European market opening about in the middle of this thing and going into a little bit of that. What do you think about? What is your take on this outside of our market trading?
Right. Well, that's the beauty of this type of trading is it's a 23-hour market, and so the black to gray represents when the regular stock market closes Eastern time, and then the rest of it is called the night session. And as you can see, there's been a lot of good moves recently during the night sessions. And you can also trade during these times too. In fact, here lately, you've gotten bigger moves during the night session than you have during the regular day session. So say if you were coming in 11 o'clock at night off a second shift job, you could enter trades during that time. And usually the Asian markets open around 10 o'clock Eastern time at night, so you can see where that happens. And then at 2 to 3 o'clock Eastern time, the European markets start to open. And so at night, if you're up and want to do it, you can trade also. So it's the beauty of this is virtually gives you an unlimited amount of time to trade if you want. You can enter trades at any time.
So I could stay up 22 hours a day and trade, and I only need to sleep 2 hours a day.
Right? Yeah, yeah. If you're of that mindset or that hyper,
maybe younger people could do that.
Yeah.
But maybe getting up a little early or something and watching that. But my next question is, by the way, the system worked flawlessly. I mean, it's very intuitive. It's very easy to follow. The indicators are there. But I have a question here. This is this morning as I'm talking to you. At 8:16 in the morning, my arrow said enter a contract, sell. But I had red on here, but I didn't have red there. I went into a no colored shading. So that's one question. Is that what is no color, not red, not green?
It's kind of a transition period,
right,
where it's getting ready to change colors and hasn't quite changed yet. But as soon as it does, then you're free to go in the direction of whatever it indicates.
And then how long do I wait? These arrows, like I say, right now I wouldn't enter the trade because I'm green. And then the next tick, I'm no shade. And then the third tick, I am red. What is a criteria for that wait time between these two?
Well, for example, like here, this one was already red, then this one turned red.
Right.
If the two candlesticks here are pretty much equal, then you could go ahead and do the sell. In this case, you could go ahead and take that trade.
All right.
But if, for example, this didn't turn red until this had already dropped down to here, then I would not have taken the trade because the move is already underway, and you might be getting in too late.
Right.
So I would wait. It just depends on how far the price has moved from once you got that initial signal till this turns to the red. And if it, like I said, if it stayed pretty much the same price there, then you could go ahead and still take the trade. But if it had already dropped a lot, in this case, then you would want to stay out of a trade like that.
Right. So these two are pretty similar with that candle wick. They're pretty much the same. The price didn't fluctuate here at all. And so if that price fluctuated greatly, either direction, you just bypass and wait for the next indicator.
Right. Like if I see there where the red shaded area flipped over to the green, but I don't have the arrows, then I would go to like another chart, like the Dow, and see if it showed something.
Okay.
And there are 4 major indexes that we trade, and so you can trade any of the 4. And so if I see that, but I don't get the arrows, then I'll flip over to the Dow chart, for example, and see if something showed up there. The other thing you can do is change the tick chart from 1597 to 4181 or 987. There are 3 main ones I use, and sometimes that'll show a signal where the one won't, the other one will.
So now we're at the Dow, and it shows an indication to buy.
So there's a perfect example of one chart not showing it, another one showing it. And so you get the 5 arrows. The shaded areas are green. And then, so that would be your cue to get in. And this happened right as the regular market was opening. And so that led to a good move. Then you just wait for the next signal, get your profit and get out of that one, and wait for the next signal to happen.
All right.
And so, so that's the strategy.
Well, good.
So.
All right. Well, that's my list of questions for now. So I'm going to go back at it and make some money.
Right. Good deal.
Thanks, Jim. Appreciate it.
Thank you.